Hello everyone, welcome back to this exercise series where we cover Chapter 7 exercises for our Managerial Accounting course, ACCT 428. In this video, we're going to be looking at exercise 7-11A. So let's read the question together. The question says, the budget director for Kanoosh Cleaning Services prepared the following list of expected selling and administrative expenses. All expenses requiring cash payments are paid for in the month incurred, except salary expense and insurance. Salary is paid in the month following the month in which it is incurred, and the insurance premium for 6 months is paid on October 1st. October is the first month of operations. Accordingly, there are no beginning account balances. And then, as you can see, the question is providing us with the budgeted S&A expenses in this section right here for the 3 months, for October, November, and December. And then we have the schedule of cash payments for S&A expenses, but as you can see, all of the amounts are missing except for the totals. Okay, so what's required here? A, complete the schedule of cash payments for S&A expenses by filling in the missing amounts. So I'm going to do that. Let's start with it. I have already created the template that we're going to need for this part. Okay, starting with the equipment lease expense. So let's go back to the budgeted S&A, and as you can see, we have the amounts right here. Now notice, I'm just gonna put a mark here because all of these are gonna be copied the same except for a few things, right? The salaries expense, first of all, the question told us that it's going to be paid in cash in the following month, right? Right here, let's go back. Salary is paid in the month following the month in which it is incurred, right? So meaning the salary expense for October, which is this amount right here, is going to be paid for next month. And this is going to be paid for in December and so on. Okay, so here we need to pay close attention to this part. And also for the insurance, because for the insurance, the question told us that it's all going to be paid. Look at this sentence. The insurance premium for 6 months is paid on October 1st. Okay. One more thing to pay close attention to is the depreciation on computer. Depreciation, as we all know, is a non-cash expense, so we're not going to include it in our schedule of cash payments. Everything else is going to be copied the exact same way in the schedule of cash payments. Okay, so let's start with the equipment lease expense. We have 7,500 for each month, so we'll copy it as it is. 7,500, sorry, let me just make my font a bit smaller. 7,500 for October. For November, same amount, 7,500, and for December, 7,500. For the salary expense, prior month's salary expense, okay, is going to be settled in that month. So because the question told us, I'll take you back here, there are no beginning account balances, right? So this is the first month of operation, okay? And there are no beginning account balances, meaning there was no salary expense in the previous month, in September, right here, okay? So the salary that is going to be paid in cash for the month of October is 0, right? So here, we're gonna say 0. And then the salary expense of October is going to be paid in November. So how much was the salary expense in October? 8,200. So in November, we're going to pay 8,200 for salaries. And the salary expense on November is 8,700 right here, which is going to be paid in cash on December. So 8,700. Okay. Now to the cleaning supplies, the same, the expense, all of the expense is going to be paid in cash for in the same month. So for October, we're going to be paying $2,800 in cash for cleaning supplies. 2,800. For November, 2,730 right here. 2,730. And for December, it's going to be $3,066. $3,066. Okay. Now for insurance premium, the question told us that the insurance premium for 6 months is all going to be paid on October 1st, right? So we'll come here and see how much is the insurance expense per month. It's 1,200, right? So we're going to multiply that by 6, 1,200 multiplied by 6, because we are paying for 6 months, all in October. And we'll go down to the schedule of cash payments. In the month of October, we're going to record that amount. 1,200 multiplied by 6, that will be 7,200. Okay? And then no further payments are going to be paid on November or on December. All right? Now let's move on to the next expense, which is the rent expense. And as you can see, it's 1,700 for each month. So we'll copy it as it is. $1,700 each month for rent. And finally, miscellaneous expenses also are going to be paid in the same month that they were incurred. So 700 for each month. As you can see here, we're gonna copy that amount as it is, 700 for each month. Okay. Now, in the question, we already have the totals right here. I did not write them down. I left it blank on purpose. I'm gonna add each cash payment or each month's cash payments, write the answer here, and then I'm going to double check and see if I have the correct total that matches what was given to us in the question. So starting with October, 7,500 plus 2,800 plus another 7,200 plus 1,700 plus $700. That will be 19,900. Okay. I will go back to the question and confirm if I've got the correct total. Right here. Yes, 19,900. Next month, November, 7,500 plus 8,200 plus 2,730 plus 1,700 plus $700. That's 20,830. $20,830. Again, I'll go back and double check. 20,830. I got the correct total. So I'll move on to the last month, the month of December. 7,500 plus 8,700 plus 3,066 plus 1,700 plus $700. That would be 21,666. Again, I'll go back and double check. 21,666. and 666. I got the correct total, so that's the answer to part A completed. Okay. We still have two more requirements in the question. Requirement B, determine the amount of salaries payable the company will report on its pro forma balance sheet at the end of the fourth quarter. Now, as you can see, for the salaries expense, it is paid in the following month. So each month's salaries are expensed in 1 month and then they are paid out in cash in the following month, right? So these we have already paid out. So the salary expense of the month of October, 8,200, was paid in November. And then the 8,700 for the salaries of November are paid out in December. So what will be remaining at the end of the quarter? It's going to be the salary expense of December, the last month in the quarter. This is going to be paid out in the following month, which is going to be the beginning of the first quarter of the following year, so in January, right? So the answer to part B is going to be this way. Salaries payable is going to equal the salary expense of December, the last month of the quarter, so $9,000. And that would be the answer to part B, okay? And then the last requirement, C, determine the amount of prepaid insurance the company will report on its pro forma balance sheet at the end of the fourth quarter. Now this one is interesting. Remember in the question, they told us that they paid in advance the insurance premium for 6 months, right? And this was paid on October, so the first month of the quarter. And this should cover the company for October, November, December, and then in the following quarter also, January, February, and March, okay? Now, the premium or the insurance premium or the policy covers the 6 months, and 3 months of those already have passed, right? So if we pay in the beginning, we're going to record it as prepaid insurance, the total amount that we have calculated, which covers 6 months, right? The 7,200. But 1/6 of that, or a sixth of that amount, is going to be consumed on October, and then another sixth of that is going to be consumed in November, and then December, and so on. So half of that amount, half of that 7,200, which should cover 6 months, should already be consumed by the end of the first 3 months, right? And what we will be left with in our prepaid insurance account is going to be the other 50%, or the other half, right? Again, hopefully this is clear, but I'll try to explain further. Notice how the insurance expense costs 1,200 for each month, right? And we paid in advance for 6 months, which was 1,200 multiplied by 6, right? 7,200 at the beginning of this quarter, so on October. Now, by the end of December, 3 months worth of insurance coverage is already expensed, and we will have the remaining 3 months coverage, okay? Meaning that we're going to record, or we're going to have prepaid insurance. It's called prepaid insurance balance by the end of December or after December is going to be you can either say 1,200, which is the cost of coverage for each month, multiplied by 3, okay? Or we could say the total amount, sorry for that, which is 7,200 minus what have been consumed already, which is 1,200 for each month of the 3 months. So that would be 1,200 multiplied by 3. So 3,600. Okay, either way, you're going to get the same result. So prepaid insurance after December is going to equal $3,600. That would be the balance of prepaid insurance account on the pro forma balance sheet. All right? And this is the answer to this exercise 7-11A. I hope you found this video useful. Thank you so much for watching. And if you have any questions, please drop them down in the comments. And until I see you in the next exercise, I hope you have a wonderful day. Take care.